So what I take from that is that there's often a little bit of a sweet spot, yeah, in terms of the dividend yield. Like if you're constantly picking stocks that have a dividend yield in excess of 5%, sometimes you can fall into a bit of a yield trap, right? But
Yeah,
whereas if you,
exactly. That's called the
yeah,
yield trap. And I
okay,
think the reason for that is it's really pretty simple to understand. Dividend yield is just what the dividend is divided by the stock price. And
yeah,
so if the stock price goes down because maybe there's something fundamentally wrong with the company, then the dividend yield is going to go up. And so it may look attractive, but that's no guarantee that that yield is sustainable. And if
right,
the stock price has gone down, chances are the market as a whole knows that there's something wrong. And so that company may be one that's at risk of a dividend cut. And dividend cutters
yeah,
underperform even non-dividend payers. So that's a really important point for anybody who is interested in dividend investing.
okay,
But so that's American data. Even Canadian data, the RBC puts out a white paper every year called The Power of Dividends, and they've shown that in Canada, over the last 35 years, dividend payers have averaged 9.1% total return, and non-payers 1.2%. So there's a big difference there. And the other thing that the Fellman French data show is that dividend payers also have lower volatility. So their risk adjusted returns of dividend paying stocks are actually about twice as high as those of non-paying stocks. They also offer protection in down markets. In bear markets, dividend paying stocks tend to only go down about half as much as non-paying stocks. So one of the skeptics of dividend stocks that I listen very, very closely to, I have a huge amount of respect for him, is Benjamin Felix of the Rational Reminder podcast, another fantastic resource for self-directed investors or people who are interested in this stuff. Even he says, though, in his podcasts and articles about dividend paying stocks, he says that dividend stocks have excess exposure to certain factors like value, profitability, and investment factors. And that's what explains the performance differences between dividend paying stocks and non-dividend paying stocks. And what he says is that there's just better ways to access those factors. But I guess my perspective is that, okay, well, there might be better ways to maybe optimize by, spending a whole bunch of time analyzing those factors and maybe being invested in a fund with fees that accesses those factors. But maybe just the presence of a good, solid, sustainable dividend is a marker for those factors. And maybe that's a really practical way to implement an investment plan on your own without getting complicated and keeping it simple. So that's what my personal investment portfolio started off as. I still have my Canadian portion of my portfolio primarily in Canadian blue chip dividend paying stocks.
okay,
And then my international component of my portfolio, I just use simple index fund that excludes Canada.
perfect, perfect.
Now, maybe I should also just mention really quickly, you can cut this out if you'd like to. But I do want to acknowledge that there are potential problems with buying individual dividend paying stocks
Sure, sure,
that people should keep in mind. Number one, especially in Canada, it's very hard to develop a diversified portfolio
yeah,
because the good dividend payers tend to be concentrated around just a couple of sectors. I think anytime you're going down the path of buying individual stocks, there's probably a greater chance of making behavioral errors with those. So that's something to be mindful of. And then, of course, there's slightly more work involved when you're buying individual stocks versus just taking a simple indexing approach. So for the majority of people, I do think that a simple index ETF approach to investing is probably the most appropriate path. But there are
no,
some things to be said for the interested investor to maybe think about incorporating some dividend paying stocks as well, particularly in Canada.